the market stock is your number one talk leader. The name is Dominic and the frequency is 93.7. You are live on Facebook, on our Twitter. My Twitter handle is Money FM Zambia, also LinkedIn as well as YouTube. Good morning, Munyumba, and welcome to this episode of Beyond the Markets.
Good morning, Dominic, and thank you very much for having me today. It is time for the end of the week edition, where we are going to go through a little bit of the data that comes in. It is futuristic Friday, Dominic. So I am going to just quickly, as I said, take a swing through the data that has prevailed for the week in our various markets. While I'll then be talking about just one thought, my thought for sorry, we just lost that second. I will be talking about my thought for the week, which has to do with financial decisions and investments, promoted investments. It is something that we do need to all start having conversations about. And also, Dominic, I want to give you my top eight tech trends. I've got a nice little list here of my top 8 tech trends that I'm looking at for the year 2023 and beyond. So for all of you who are looking at how things are going to be done, what are the important technological advancements and trends that are creeping into Zambia that we should be paying attention to, I think these are some things that you're going to really want to enjoy, and I'll talk you through them through this session. But let's kick off, Dominic, first with some data from the FX market. Now, on the FX market, we have seen that there is a continuation of the Zambia kwacha losing value. We're now on 64 consecutive days of the kwacha losing its strength. So it's down to 18.2247 on the interbank rate in terms of the average for yesterday, down 0.15%, and it is continuing to lose steam. Though the pace at which the kwacha is losing its value is still starting to slow down. We still do have a kwacha that is generally getting weaker and weaker, and continuously getting weaker and weaker. We also are looking at the kwacha versus the rand, which is at 1.067 on the interbank rate, down 1.45% from the previous day, because the rand actually did lose a little bit of power, did lose a little bit of value. So it is year to date, we still have the kwacha doing stronger, but the rand is still in a much stronger position, and that's been on and off tear. So I think for now we are seeing that weaker kwacha, but also weaker rand is playing out strongly here. The other part that we're also looking at, by the way, is the other part that we're looking at as well is the commodity sector. Copper is back to 8,426, up 2.1% yesterday. That was a little bit of a strong bump up from some outlooks expecting the jobs data coming in America, while you also did see a 1% jump up in oil prices to 78.84, while we're also seeing gold prices that came down by 1.147%, and therefore gold in kwacha also came down by 0.9. So defensive assets coming off and aggressive assets coming down. But what does this mean also for those of us who are looking at the oil sector in terms of the potential price movement or potential price action in the oil sector? Well, the potential price action in the oil sector right now is revealing that we might actually start to see probably prices potentially come down. And I say potentially start to come down, mainly because remember, there's the tax changes. Whether those played a role in last month or not, that's a different story. But we might start to potentially see that. But it's not much of a change. We're talking about maybe a 1% shift downwards in the oil prices, maybe down to 24. It's going to take a bit of time. Remember, we've got a very weak currency on our hands, which is continuously counteracting any weakness in the global oil markets. So that's the problem right now. Our FX rate is our worst enemy, and therefore it's allowing the energy markets to continue having a negative position on us. So that's something that we're going to have to pay a lot of close attention to in terms of how we're actually going to be doing in terms of oil prices. Now, when we're looking at our bond market as well, we've seen that our bond market has continued to slide, has continued to move in the same direction. We are still seeing about a 0.15% movement up in the bond index, and therefore still a 23.66% yield on our secondary market bonds, which is still much weaker than what we're seeing on the primary market. Still a notification, Dominic. We still have 14 days until the next auction, so it's exactly about 2 weeks. Sorry, not 40. We still have exactly 14 days till the next auction. Remember, the next auction is on the 20th of January, and you have to have your bids in by the 19th. So everyone has to prep themselves. Remember, the outlook I have on bonds for now is that interest rates are going to still remain elevated until two things change. One, interest rates from central banks in the Western world decide to start coming down, and right now you're also getting a bit of fuel from the Federal Reserve of America, who's saying, "Hold on here, this strong jobs market means that we're not done yet juicing up this inflation, juicing up this inflation fight." Even though right now it's creating more job cuts than was expected. Amazon yesterday announced that it is cutting 18,000 jobs around the world due to the inflation-driven slowdown of its business. And obviously because the pandemic started to switch off, therefore they don't have that extra pandemic juice that they were running with. So they are stories that are actually affecting the market on quite a big level here. And then the second thing you have to pay attention to also is that, are we going to get our debt negotiated on time? All this simultaneously happening while we seem to be having domestic issues, especially in our energy sector and specifically our electricity sector, which is now becoming one of the bigger issues. It's becoming one of the bigger talking points and the bigger issues on the market. And that's the reality. The moment you start having fuel and electricity issues, that becomes everyone's talking point day in and day out. So I think these are some of the big conversations that we will be seeing throughout this point. But the main point is, what will that do for our bond auctions? For now, we the more of the strength is probably going to lie in the shorter end of the bond market. People are going to hold a lot more money in the shorter part of the bond market, be it the 2-year, 3-year, 5-year, because that's more of your inflation-sensitive bonds. Maybe you can include in there the 364-day Treasury bill because it is part of your short end bond prescription there. So remember that most of those the rates of return are between 15 to 18.6% in terms of the average rate of return, and we'll see what does that mean with inflation. Will inflation break out of the 9.7 to 9.9% hold that it's had for the last 6 months of 2022, or will it continue going along that line? Those are the big stories, Dominic, that we're going to be looking at for the rest of this, and that's how this week is panning out. Now, let's take a look at the data points. Let's take a look at the economic calendar from yesterday. But in fact, first, let's take a look at the data points. In terms of the key commodities that we are the ones we've been tracking, whether it's gold, oil, and how they're opening up the markets today. Today, we're seeing oil at 79.20, so it's still upwards. We're seeing copper moving up, so 8426. We're seeing gold still moving upwards, and we're also seeing the dollar still moving upwards. And the Chinese yuan hits a 4-month high on reopening cheer. So in other words, that it is going to be a reopening. Remember that they're going to remove all restrictions within 2 days. So China is going to be fully open again. And therefore, oil is extending its rebounds based on that. Even though it had weekly losses before, it's actually extending its rebounds. And you've also got U.S. jobs data coming up today while we have Washington gridlock. The market loves Washington gridlock. It doesn't like it when politicians can actually do stuff. It's hoping politicians are so tied up that business activities can continue to do what they need to do. So that's what you're seeing on the main market. But then when you're looking at as I said, economic calendarized activity from yesterday. Remember, yesterday we were still continuing on PMI data and some inflation data that we're reading into, and here goes some of it. You did see composite PMIs in the UK coming off, showing that there is still a negative sentiment, but the negativity is reducing. PPI data coming out of Europe has shown that supply chain inflation is coming down. So therefore, inflationary pressure due to supply chains is starting to close down. We are seeing consumer confidence in Mexico starting to pick up, industrial production in Brazil starting to pick up, ADP non-farm employment, this was the key one yesterday, came out of America. You did see a strong jobs number In other words, non-farm employment changes were up about 235,000 jobs were created in December 2022. So they did have a strong end to the year with the expectation of only being 150, higher than the 182 of last year. Of the previous month. It shows that the job market in America is still strong and still tight, and therefore the worry is that the Federal Reserve can come in with still strong rate hikes. But however, inflation does seem to be coming down. Jobless claims in America are also starting to come down. Initial jobless claims in America are also starting to come down, with 4-week average jobless claims also starting to come down. In other words, those who are on unemployment insurance in America are also starting to come down, meaning people are finding jobs again because labor force participation is starting to pick up. So that's the concerning part, and we'll see most of that data in the U.S. jobs numbers. Now, a tight U.S. job market means that the Federal Reserve does not have any fear of continuing to raise rates, because the concern is always that if the Federal Reserve raises rates, they don't want to harm employment. But they're seeing that they're not doing any harm to employment, so therefore that's why you're seeing the push upwards. The other parts that we're also starting to see in the markets, you're seeing crude oil inventories are up by 1.69 million barrels in the U.S. So that might put a bit of pressure or a bit of a cap on crude oil prices going forward. Now, taking a look also, services PMIs in Japan are also up to 51.1. So remember, Asian economies are becoming very strong service-driven economies. Now let's take a look at data that's going to be showing today. Remember, it is Jobs Day in America. It's going to be the first jobs report in America for the year 2023. That'll guide a lot of what the Federal Reserve is going to be doing with its interest rates. Remember, Fed interest rates are extremely important to Zambian interest rate story. Remember that as long as the Federal Reserve is pushing up its rates, then the Zambian central bank, the Zambian bond market is then going to start seeing more fleeing. But when the Federal Reserve starts to cool off, Zambian bond market might see a bit more entrance. So the data that we're looking at today is core CPI and CPI data, inflation data coming out of Europe, to see if the full supply chains of Europe are going to be existing with much lower inflation. Expectation is that inflation is going to come down to 9.7% and come out of double digits in Europe. That's a big expectation. Factory order data is expected to come out of Germany, while we're waiting for housing price data to also come out of England to see how good the global housing market is and what that means for copper. Copper is already on the upwards point, so a stronger housing market would help with copper. And also with taxes that the government is able to derive from their guts. But however, the main story for today is payrolls data in the US alongside retail data in Europe, with ISM manufacturing data also coming out of America. That's biggest stories that we're expecting today. Now, main stories from the global economy, Dominic, before we give you the four horsemen outlook and the read. Before I give you my full four horsemen outlook, is obviously the Chinese yuan getting weaker and weaker. The Chinese yuan, getting to a stronger point. Oil itself extending gains, as we talked about, mainly due to the fact that China is reopening. China may ease the third red line in property. That's also a big one, by the way. China put 3 red lines to control property lending. Now they're looking to try and relax property borrowing to help stimulate it. That's good for copper, by the way, because if the Chinese property market picks up, that means more demand for copper. And that means that if copper is now battling both electric vehicles and also battling Chinese Chinese property, that means that copper might go through a temporary rally, which might push up the economy in that perspective. So there's going to be a lookout for what's going to be happening there. And then just a little bit of news from the week, which we didn't cover earlier, was the Tesla numbers. And this is quite important. Tesla is being criticized for not hitting a 50% growth year on year for the first time in car growth. So Tesla had actually now delivered 1.3 million cars last year. They broke through the million barrier for the first time. And that's good for electric cars, but they only grew by 40%. So the guys who are from Tesla are saying, but we're being criticized for not hitting 50%. The whole auto sector is declining by 8%. And then you're talking to us about not hitting 50%. That's harsh. But anyway, the point I'm looking at is that we still have a very fast growing electric car sector, which means that the demand for copper will obviously be bolstered up by that fast growing electric car sector. However, Now, with Tesla on the rise only by 40%, Tesla was outmaneuvered by a company called BDY from China, who is actually the biggest EV producer in the world now. Tesla is now number two. It is not number one in car delivery. But remember, the value of Tesla cars are bigger. BDY cars are much smaller, much cheaper. So therefore, the revenue that BDY is able to produce is much smaller because Tesla EVs are somewhere close to about $60 to $100,000. Those are luxury EVs versus BDY cars, which are below $20,000 and are sold as little beetles throughout China. So but BDY did deliver 1.6 million cars, and it's up 192% from last year. So it's really in acceleration mode as the fastest EV producer. So you already have two very strong EV companies at the top pushing up the growth of EV. So just the two of those companies already tell you that 3 million EVs were delivered this year. 3 million EVs were delivered this year. That's a big number for that sector, even though we're trying to get to about 50, 60 million a year, but 3 million already. And that level of growth that the EV sector will continue to do, where it will continue to grow by 50 to 100% a year, is going to at least give a lot of hope to us being part of the EV battery mix. So all of our investments in mineral sectors to make sure we're part of a diverse EV battery mix. This is important because we are still seeing a lot of growth numbers coming out of the EV sector and growing out through there. So that's some of the biggest news for this week. China is reopening, China is relaxing its property sector, and the EV sector still has strength, even though Tesla has slightly slowed down versus an auto sector, which is generally is in a slowdown. So the EV sector with the Chinese property sector, with China reopening, is strong news in terms of the medium to kind of semi-long term outlook for copper and probably what that can do for our tax base as a country, and the fact that the mining industry seems to be coming back towards growth. Remember that in the third quarter of 2021, mining sector did come back. Now, that's on the demand side. Problem now is on the supply side. Can we meet any demand and start to produce more, given that we've decided that the country might have to sit in the dark for a little bit? That was where things are going to get a little bit interesting on the other side of things. But I think for now, Dominic, that's the news outlook. Let me give you my four horsemen very quickly. My four horsemen are telling me that inflation is coming down, growth in terms of the job market reads coming out of America is still strong. Industrial seems to still be strong, especially because of the copper and the potential property reads. So we do have some slight optimism starting to bubble under the surface in the global economy. What that means, we're not sure yet because it's still a very uncertain time. Interest rates have held still, and they might start to come downwards, but not fully. Okay, so we do have lowering inflation, flat interest rates, good news coming out of the industrial sector, and potential good news coming out of growth. Those are my four horsemen reads before we come on to the other side where we talk about investment advice. And I'll give you my top 8 trends of 2023 onwards. You want to really look at that, especially if you're in the business sector.
Absolutely. This is Beyond the Market. Remember that Beyond the Market is found by Zanaco. For your contribution, make sure that you're utilizing the number 077 That's 077 And of course, be through to us right here on this very platform. We're live on LinkedIn, live on YouTube, live also on our Facebook page. Simply search for Money FM Zambia. Let's get a breather from our sponsors who happen to be Zanaco. And of course, after that, we'll be getting into more. And as far as just Beyond the Market is concerned. Good morning. We're back. Thank you so much for still staying tuned. This is Beyond the Markets on Money FM 93.7. Utilize the platform. The number you're using for a contribution is 077 That's 077 And of course, we're live on Facebook. We're live on our Twitter handle, LinkedIn, as well as Facebook. Remember that you can also stream us live on our website, which is www.moneyfmzambia.com. Let's get started, or rather, let's get deeper and deeper into our conversation this morning.
Yeah, no, Dominic, just as you're throwing out the lives there, I was like, yeah, there was an old song I remember by Raekwon from Wu-Tang called Live from New York. I was like
Yeah.
waiting for you to say that. Like, because we're live from Twitter, we're live from New York. That's I was just waiting. I was literally just waiting for that. But anyway, let's get down to a little bit, and good morning to everybody who's joining us. Good morning to Aaron, who's actually here just joining us in the comment section. Thank you to everyone who's there. Please comment, share. As we always say, follow whatever channel you're following us on. Please do share this with your friends and communicate to all of them that, hey, this is the place you want to be if you want to get all your business and technology information. So your business, being it Friday, we are talking futuristic Friday, so we're going to be talking about technology. Yep. But before we get in there, Dominic, I have seen one of my biggest concerns, one of the trends that's picking up socially is the rise of unsolicited investment, not just advice, but products that are being pushed to a lot of innocent people. You know, Dominic, there are serious issues in this world when it comes to how do I put this? There are serious issues when it comes to people's money. And one of my biggest concerns in this country boils down to the fact that we want to have these debates on social media about where people should be putting their money. And a lot of people may not have the qualifications to be having those conversations. And the reason I say this is because I think people need to understand the implications of financially advising a person. It's actually not as easy as you think, and there's a lot more responsibility you need to bear because a lot of people are doing this in a very careless fashion. So I wanted to just first remind people that we do have a serious problem of people being swindled in this country. Like, we seriously do have a huge problem of people losing their money to horrible investments. So I'm gonna share something, Dominic, just now quickly, and a little clip from last year where there was a scam called Shopee Mall, and some people got caught on the wrong side of that scam. Sorry, and people got caught on the wrong side of that scam. So I'm just putting this out for everyone to understand. And yes, this is going to be, it's a little bit hilarious, but this is an interview of a lady who got scammed, busy chronicling what happened to her. And I'm going to talk about this because there's a mentality behind this that needs to be dealt with. But here you go.
10,000 kwacha, you expect 10% of that money that you have invested, or even more than that. There were even, again, bonuses like you deposit 10,000, you receive about 1,500 bonus, of which was more convincing because people made a lot of withdrawals, of which was another convincing measure because they had to make withdrawals to prove that the platform is legit. Now our complaint is that why is the government allowing these illegal platforms to operate and then scamming us, the youths? Us, we are vulnerable youths and we want help.
So that's just something I wanted to put out there. So Dominic, you can look at your facial expression. So the reality I wanted to just put out there is when people get duped, all of a sudden they're vulnerable. They're the vulnerable youth and they need help. They need support. When she was busy trying to make money very quickly, doing almost nothing and thinking she can just withdraw money, she wasn't such a vulnerable youth then that needed government help. You notice that all of a sudden people need help then. And this is my issue. As a country, sorry, you're saying?
I'm saying, true, because when you want to advise a young person when they've got money, you really can't advise them. But then somebody told me to say there are three people that perhaps you cannot advise. Somebody who is a follower of a papa, somebody who is in love, and somebody who's got money. You can't advise these three kind of people because it's very difficult. So a youth with money is untouchable, and that one was untouchable. Now she wants government's help to perhaps curb this vice of scamming that's currently going on. Pretty much sad for her.
Yeah,
Uh,
yeah.
hope she got her money back.
And this is one
Yeah.
of the major scams that happened last year. There was Shopee Mall, there was Guapini, there was Go Live. Those are the ones that we know of. There were plenty of other ones where people got whacked badly. And the issue here, Dominic, I keep telling
Yeah.
people is that when it's too good to be true, it often is. Okay? When the numbers are too great and you are the only one who seems to know this, but no one else wants to, then perhaps, just perhaps, perhaps, then you're in a situation where somebody is milking you. Why are people telling you the story? This is why I tell
Yeah.
people, if you want to understand scamming, okay, if you truly want to understand scamming, watch a TV show called Hustle. It's actually a very good one that helps people understand why people get robbed and why people get scammed. And I'm going to show you a little clip from it. I don't know if I still have it here, but I'm going to show you a little clip from it because Mickey Briggs, who's actually the star of the show, it was a show that was done by BBC, and it chronicled four street grifters, or a gang of street grifters who used to steal from people. And in order to they used to successfully steal from people by getting people to agree to give them large sums of money in exchange for some hustle or some story that they've given them. And this is what I keep trying to tell people. It's in that clip, though, I think they were talking about it, and I'll share it, I think, probably the next time, on the fact that you cannot crook an honest person. Okay, if a person is looking to make money in a normal, legitimate way, the slow way, it's actually very hard to trick them. And they're on a plan, it's very hard to fool them. It happens the majority of times when people are trying to get rich too quickly. That's when most scamming occurs. It occurs when people are trying to get rich too quickly and their greed is having the best of them, or their desire to get rich very quickly is having the best of them. Maybe they feel entitled to these things. So now the problem I have is that whenever people go and get scammed in Zambia, they don't take it as, okay, you know what? And there are people who do, but there are people who say, look, it's my responsibility. I made a mistake. I just need to know better. They'll come to me and say, Mnyumba, do you have any educational material I can learn on investing so that I learn to do the stuff properly? And to a lot of people's credit, they come to you and say that. To a lot of people's credit. The problem is the vocal ones. The vocal ones now go on TV and start saying, no, 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 government must come and help us. Then what starts happening is they start pressuring these politicians, who then pressure the regulators. Then I come back here, Dominic, and tell you
Yeah.
the regulations in this country are too much for people to start businesses and run businesses. Why is that? Because people in Zambia don't want to take responsibility when they make mistakes like that. That's a mistake. You went and thought you could make money overnight very quickly. Then when it came back and blew up in your face, you want to now start creating regulations and say, no, no, but the government must step in. The government must step in. No, the government does not always have to step in. Your common sense has to step in. Why does the government have to step in before your common sense steps in? It's your choices that did
Yeah.
this. You are choosing to go and run after money. Can you not control yourself? Okay, that's like Dominic, and I wish there was a better way of saying this, but that's like Dominic Guy saying, as a man, as a married man, I'm getting tempted out there. The government must step in and remove all these single people who are throwing themselves at me. Control yourself. What's wrong with you controlling yourself? Must the government step in
Yeah.
from every? Is that the excuse married men who are stepping out on their wives? Is that the excuse they're going to start giving? The government must step in. These are the issues. People, control yourselves. Get the right information. Get the right advice. And I want to now talk on the other side of this, Dominic, also about advice. Okay, I put out something recently, and I said, be careful of obtaining financial advice from somebody who does not have professional or regulatory/legal liability if they give you bad advice. Okay, be very careful of obtaining financial advice. I'm not saying you can't, I'm saying take extra caution with it, because if it goes wrong, this person can just say, but you followed it. Nothing here. There's not. There's nothing. You decided to follow my advice. That's what some people will tell you. Some of us, Dominic, we have licenses to preserve. We have regulators to answer to. There are people who are professionals who have someone to answer to. So when they give you advice, they're thinking, okay, if I give bad advice, one, it'll affect my brand. So I won't be able to actually I won't be able to actually make money utilizing my advisory tools anyway. That's one. Two, I've got a profession to protect. And three, I've got a regulator to answer to. If you've got three things here, then ask yourself, okay, if this person gives me bad advice, it's a brand risk for them, it's a professional problem for them, and it's a regulatory risk where they can actually end up with sanctions imposed upon them. Maybe I can take that advice a little bit more seriously. That's what we call qualifying advice that you're getting. Okay. If you're getting medical advice from a doctor, that doctor has got a practicing license they have to protect. They've got a board they have to answer to. They've got institutions they have to deal with. So you have to recognize that when a doctor gives you medical advice, there is a backing to it. Somebody has to either somebody has got a business brand that should be on the line, a profession that can fall into question, or they can have a or they can actually have to answer to a legal board of some sort. If somebody doesn't have those three things and you're busy taking their advice as gold, you've got to be careful, because if it goes wrong, there's nothing that's going to happen to them and everything will happen to you. And to those who are issuing advice, be careful. You know, Dominic, I say this because one of the biggest reasons people commit suicide is money. Okay? People kill themselves because money goes wrong. We like to ask, no, but how come this person, they were so young, they were so vibrant, they just woke up one day and they thought suicide was the answer? Because they lost everything. They went through something where they lost everything. Okay? They had no one to talk to. They were ashamed. They were in pain. They were sad. Their spouse is leaving them. So when you're giving out financial advice and you're telling people to invest in certain things that may be too good to be true, and that person gets scammed or their money gets lost in some negligent handling of money, because I've seen it. Not all these things are just straight up Ponzi schemes. Some of these things are just poorly structured financial systems. They are poorly structured products that are just waiting to implode because they were not structured properly. And then people go and lose huge chunks of their money, their
Yeah.
life savings. I'm talking about people, Dominic, who went and they take their parents' money, their parents' savings, and they go and put it in there. No, mom, dad, just give me your savings. I'll put it in there. They've lost their money. They've lost their parents' money. They've lost their spouse's money, their children's education money. That person is going to be under pressure. And then you start asking, where's the suicide rate coming from? When people lose their money, they lose their pride, they lose their sense of humanity, and they lose a lot. And they start to consider taking their life. So when you're giving out financial advice, I always tell people, you must ask yourself, if things go wrong for this person, and you hear tomorrow that that person hanged themselves tomorrow, and you hear that, are you going to sleep well? Are you going to be okay? Are you going to be comfortable? Because when you are giving out financial advice, remember, you are giving out life or death advice. That's how close this stuff gets. It messes up families, it messes up people's lives. That's why I take this stuff very seriously. I know those risks that are standing on. That's why I make sure I research almost everything I do. That's why I make sure I give people as much practicality. This is why I stick to certain things. Okay. This is why there's certain areas of the market I'll say I just don't have the understanding of that area. Please go and see a professional. The reason is because I understand the implications of me misguiding a person purposefully. Now, will I give out 100% perfect advice? No, but I will get very close because I got to make sure that I understand the ramifications of this. So people have to be careful. Okay, you all have to be careful, even those who are standing there saying, because I had people blashing back and say, no, but people know from the school of life and everything. The school of life people will not be there when your loved one hangs
Yeah.
themselves. They made a bad financial decision. School of life people will wash their hands and will tell you, I have nothing to do with this. That person made their own decision, and they'll leave you to bury your loved one. You have to be very careful about these things. I have to answer whenever things go badly. I make sure that I'm clear of my conscience that if I gave someone financial advice, most probably it went wrong because they didn't follow it. Okay? Most probably. I make sure I give out sound advice because I understand the implications of telling someone to go and invest in something that can easily go belly up if we're not careful. Okay. So that's what you have to do. And that's why I always give people both sides of the equation. So in this time where we're having the rise of financial literacy and financial influence and all that, just be careful about going into this game of financial influence because you want attention. You're dealing with people's lives.
Mm.
Okay, when you're dealing with people's hard-earned money, you're dealing with their lives, you're dealing with their soul, and when somebody loses their money, they can take their life. I'm just trying to make sure I drill this into as many people's heads. Somebody can take their life from a very bad financial outcome. Are you ready? Do you have the clean conscience to be able to do that? And even to people who are taking advice, bad financial advice can lead you into that space. So you really want to make sure you get it from a professional because financial advice is life and death stuff. It's very similar because Dominic, people, it's love, health, and money. This is where people's lives go up and down. These two areas, this is where people's lives go up and down. Okay,
Mm.
love, health, and money. These are some serious issues when
Absolutely.
it comes to people's lives, and we have to treat them with sensitivity. That being the case, I think
Yeah.
uh,
Before you, yeah, before you proceed, what I know that for sure one of the contributing factors as to why people get scammed is because of unemployment, because they have nothing to do and they are finding something that can help them perhaps put food on the table. Thereby, having the little that they have, they want to sacrifice and invest in these fast money making ventures. But really, what could be some of the other contributing factors to why people get scammed? I mean, we see people know invest in 100 kwacha, you get 1,000 kwacha in 2 hours. Where does how even I don't know, maybe magic in itself, but I don't know where you can get perhaps you invest 100 kwacha then 1,000 in 24 hours. Perhaps just outline some of the factors why people perhaps get scammed every now and then, even after seeing other people as an example. They are an example to say I was scammed, but other people still go further and engage in such activities and get scammed. Your take.
well, because people believe that they are not going to be the ones to get scammed. That's the thing. People believe, no, it's for me, it's different. For me, it's different. But also, it's desperation. Look, it's desperation. It's a desperate situation. Unemployment and poverty really do lead to a lot of fast money things. Be it sports betting, lottery tickets, scamming,
Betting,
a
yeah.
lot of the things that steal wealth are found at the bottom of the income spectrum. Unfortunately, these are what we call poverty traps, right? And they're filled with it. Like whenever I drive through a compound and I just see betting booths, bars, because these are the things that keep people poor. The things that keep people in poverty are the things that take away every kwacha that they earn. Unfortunately, and these are the things. That's why lottery tickets are at much higher rates. It's just at least it's much better that stuff is gone, but lottery tickets at much higher rates. Gambling is at much higher rates. Drinking is at
Yeah.
much higher rates in lower income areas. And what that does is it keeps the poor extremely poor. And every time they have a thought of ever exiting poverty, they have this instinct to take their money to something that's fast. And it's because those things are lurking around them. We've also, Dominic, made it easier for people to get scammed than for people to do legit things. Also, with our regulations in our country, what we've done is we've blocked a lot of the creation of the legitimate products to be able to reach the bottom of the chain. So, in other words, investing, it's easier to get scammed out of 100 kwacha or 200 kwacha or so forth than it is to invest that money because the investment vehicles have been made inaccessible, they've been made very complicated, they've been made rather difficult. And that's been work that we've been trying to do to make sure that we can make these things easy, we can make sure that they're affordable to people. Because if doing the right thing becomes easier, then the wrong thing doesn't become as popular. So in Zambia, what we need to really focus on is making things like investing in the stock market. How does somebody do that when they have 100 kwacha? This is where you have to have ETFs, for example. How do we get those into the market and operating better? How do we get unit trust to be much more usable using mobile money? instead of just locking it away for people with bank accounts. Because the majority of this country has mobile money. Most scams are accepting mobile money, but not most banking, not most unit trusts. So when more scammers are accepting mobile money than unit trusts are accepting mobile money, of course more money is going to go into scams than it is to unit trusts. So the opportunity to get out of poverty becomes also structurally problematic. It should not be easier, Dominic. I'm sorry to say this, but it should not be easier to set up a sports betting operation than it should be to set up a unit trust to help people invest their money in legitimate things. That should not be the case. But that is what we're doing. We are structurally approving poverty that way. And therefore, we're sticking people with no option than to look for fast cash exits. That's what we're also doing. So structurally, we have some part of this to blame, but we're also not financially educating people. The other thing, Dominic, the reason why people believe that you can put a few thousand kwacha in something and then get millions out of it, farming goats or chickens or whatever, or all sorts of things, because that's the new craze that's coming. Or somebody can tell you, give me 1,000 kwacha, 100 kwacha, I'll give you 1,000 in 5 hours, because most people are also financially illiterate. And I mean, when I say financially illiterate, I don't mean just the basics of being able to transfer money here and there, Dominic. I'm talking about the fact that they don't know how to manage they don't know how to move money about. Like, they don't know how it actually grows. They don't understand how investments work. There's an illiteracy, a huge illiteracy in how investment works, how compound interest works, what is a good rate of interest. We also are used to people who are in the loan shark industry who will charge you 40% a week or a month and think those are normal interest rates. Those are not normal interest rates. They're not sustainable. Okay, those are the real issues that people need to start working out very quickly. Anyway, Dominic, very quickly, just to round up today, I wanted to just quickly go through my 8 trends, tech trends, as we wind up. But to everyone, please take care, exercise caution. And if you're going to be going around doling out financial advice, please take into consideration that that person you're giving financial advice to, if you give it out wrongly and you encourage them to go and do something that's reckless, if they take their life, it's on you. It's on you as a person. I think you should hold that very carefully. So be very careful when you open your mouth and just post stuff. Just be very wary about that.
Yeah.
Now,
30 seconds. Absolutely.
Pardon?
Yeah. Perhaps 30 seconds. I could just quickly read out some of the messages coming through from these guys on Facebook. Just 30 seconds. Aaron Mono says, nice. Thank you so much, Aaron. Yeah. But Eddie Banda says, Charles Sampa. I don't know why he's mentioning Charles Sampa, but yeah. Priscilla Zulu says, good morning, gentlemen. Good morning to you, Priscilla. Mulungu Ruben Jerome. Seems like Mulungu is actually the Zambian Gabriel Jesus. So he says, Boma Yanganepo. Moving on, Barnabas Mwade says, reminds me of Charles Panzi. But also, Wicks Mulungu Jr. says, good morning. What lessons can we learn from the collapse of FTX? Kelvin Lumumba says, good, and Dominic, this is very true. Zambians are very passive and want overnight success. We never want to put in the work and learn the right way of investing. Contractor, is it Contractor Services Limited, says, keep up with this type of money information. Thank you so much. Sinta Mwanga says, good morning. I think those are some of the messages that we have this particular morning. We might proceed because we're pretty much done.
Okay, so in this last couple of minutes, I'm going to read to you the things I call the top tech trends, which I believe, and I'm going to get them started and finish them on Monday. But everyone would want to piece in on this part on Monday. But I'm going to get them started. One, Dominic, the Internet of Things. Integrated solutions in Zambia are going to be a thing. And I'm going to start with this one. I'm going to leave this one actually as the main one. Integrated solutions, Dominic, I think that the biggest trend that we're going to see in Zambia is connectivity. The ability to connect things and people through devices is going to be a very big thing. Connecting people to restaurants and getting a thing that you can order food from, that's a big thing. Connecting people to taxi drivers who are looking to, or taxi drivers to customers, that is a big thing. The biggest trend, I was sitting with a friend of mine recently who I used to work with, and he was asking me this question. He says, what is the trend of our generation that will create wealth? He says, because before it was standardization, or it was transportation, it was these things, it was energy. What is it? And I said, our generation, the biggest thing is connectivity. Connectivity is going to be the biggest source of wealth, because people value convenience and access. That's one thing they value right now. So when you're creating a product, if you're looking at creating a big network or system product, the question you must ask yourself is, what is it connecting? Because we're going to find that people want to be connected to as many people and as many things as possible through the singular devices that we are using. And it's happening in Zambia. Connectivity is a really important service. The second big trend, Dominic, I'll point out here, is domestication of supply chains, which will potentially lead to automation. Okay? Domestication of supply chains, in that people are bringing things back from producing in China. Take a look at our manufacturing sector. It's been posting growth. Our consumer goods import sector has actually been contracting, meaning that we're making more things locally and than importing them that we used to. That's been happening over the last 2 years, and we're seeing that transition will continue to happen. China's manufacturing sector is slowing down, while the rest of the world's manufacturing sector is trying to pick up, because everybody's trying to do things. But we don't have labor as cheap as China, or we may not have things as cheap as China. So it's also encouraging a lot of the manufacturers to seek automated solutions, especially the bigger manufacturers. They're looking to automate in order to maintain the same profit margins as though things were happening in China. So the first two trends I want everyone to focus on. And I'll finish the rest of these. I'll even share them on the weekend, and we'll finish them. Please tune in on Monday as we go through it, because I can see that this conversation on financial advice became a big issue. But there are 8 trends that I have, and I'm going to share them with you as of Monday, of 8 technology trends that I see from 2023 onwards for Zambians you really want to keep an eye on. And just quickly, Dominic, to answer that question, what lessons can be learned from the collapse of FTX? Don't put all your money into things that you think are going to make money too quickly. Everyone liquidates everything, throws everything in, and then when that thing melts down, they're crying when it goes down. You have to be careful. Don't go all into things because the hype is around. Don't believe the hype, and stick to systems, stick to conventional things where the majority of your money is held. That's a lesson a lot of people need to learn from FTX. And with that, Dominic, we call that a day and we call that a week. And I'll see you at the end. I'll see you at the beginning of next week.
Yeah. All right. Thank you so much, Miriam. And of course, that's all about just today's Behind the Markets. We appreciate your company so far. Just stay tuned for more right here on your number one talk business talk radio. Bye bye for now. Remember, the Behind the Markets is powered by Zanaco. Bye bye.